Okay, welcome to the Swing Trading with Cycles channel. We're going to do a uranium update here on November 23rd. It's actually the day before Thanksgiving. So for those that celebrate that, happy Thanksgiving. We'll start with CCJ, but we're going to focus this one on actually ratios. We're going to look at the ratio of several miners to URA. We're just going to use that as a proxy. I'll say it's pretty similar if you use a different ETF as well. So for CCJ, what you'll notice here is that we're holding a series of higher lows. So we have, starting with this low here, then this one, now this one. Notice price is holding at higher established levels. And this, to be clear, these are all swing lows, right? So this is a swing low that we made as of, right, crossing above there, right? And so now here today on Wednesday, last trading day of the week, because of the holiday, we're getting follow through. We're also crossing above the 10-day moving average. So this could actually be your, a cycle low here. This is day 24 plus 15. So, day 39, something like that. And you look at the weekly, more importantly, we are setting up for a bullish outside weekly candle. Now, obviously, we've run out of week now, right? Because today is the last day of the week. So we could see that get completed next week, right? Where you have your subsequent candle that kind of completes the pattern, makes a high above this, because we already made a low below here, and then we went green, but we're just kind of running out of time. So that's going to be interesting, right? And on the monthly, we are still very firmly an inside month. I mean, now a doji, and because of the wick that we're building, we are going to be an inside month most likely in December, right? So we're going to be inside a month that's well, actually, this is not inside, so it'll be another inside month. But well, actually, excuse me, it'll be right. We'll be inside of this month, which is inside of that month, right? So it'll give us some pretty clear levels. So let's jump to the different ratios. So I have just 8 of them up here. This is the monthly chart, right? And actually, let's just change this to the quarterly. That could be even more telling, right? And so I'll pause here and just give you a chance to take a look at these, right? And it should jump out to you which ones are more bullish versus less bullish, right? It's very clear. It's not subjective at all. It's pretty simple. And some of these are sort of aggressively bearish, actually, in terms of the structure. Like, it's like, oh God, that doesn't look good relative. Again, this is all relative, so it's not absolute performance. So as I'm just adjusting these, hopefully you've had a chance to take a look. So and I'm just talking about the ones that are on this page. The winner for the most bearish, well, I guess that's kind of a toss-up. This looks pretty bad, right? This is YCA, so yellow cake versus URA, and you can see this is your annual. This is your your quarterly chart. We have a big swing high from 2020, and we've now come back and tried to do this kind of V-shaped move, but we're stalling out there. Now, it doesn't mean we have to fail, but notice this is a pattern of a bearish outside weekly candle. Oh, excuse me, a bearish outside candle, period. In this case, it's on the yearly time frame, so pretty bearish. And so if the pattern completed, that would be a low below 1660, right? And we're obviously running out of year, just like we talked about how we're running out of week for CCJ. So you could see a world where, again, it's that same. These principles are all the same on different time frames. They're just more significant on the higher time frames, where we get another yearly candle like that. Not saying that's what's going to happen, but just that's what you start to kind of scenario plan for. Obviously, we could see something where, like, imagine if the next yearly candle looks like this. Again, I talk like, what are the odds that it's going to look like this, right? I think they're probably low, but you have to plan for what is most likely to happen, not for like, oh, what we need to have happen. So this is right now literally heading lower as we speak. And so that doesn't look, and that's the ratio though. That's the ratio, to be clear. CCJ versus URA. Now, this is in an uptrend, so it's less bearish than this, because this is a lower high than this. This is actually at all-time highs, right? The ratio of CCJ to URA, and obviously URA doesn't have a ton of history, but CCJ had been doing really well, and then we've had this like pretty big setback here in November. So it looks like we're probably starting a big pullback in terms of CCJ, just not outperforming its peers, its minor peers. So those are the two really bearish ones. The most bullish is, or one of the most bullish is NXE, right? Nexgen. NXE is the ticker. That's your foreign ticker. There's going to be a different ticker for OTC in the US. But again, remember, this is your quarterly chart. So to be clear, that is a quarterly swing low, right? That's what we have in place. And again, that's your ratio chart. We will look at the absolute chart for this one, and it has an actual quarterly swing low in place as well. So not only is it, you know, bottoming on the high, like in absolute terms, but it's also now, you know, basically you've pulled back for all of these quarters, and now you're starting to kind of break out again, right? Just like we had this long period of outperformance, and then we pulled back. So now we're potentially making another move like this. So I'd say of all, Nexgen is the name of the ones that I've seen here. Now there are a few others that look strong, like BHP is actually really strong, but that's a diversified name. It's not just uranium. Now obviously this thing has a long way to go in terms of going back to all-time highs. So it does tell you, again, this is not a pure uranium play, to be fair, BHP, but it's doing really well in absolute terms as well, which is why obviously it's lighting up on this chart. UROY is interesting. We've got a pretty big pullback here on this quarterly, which is a pullback on the monthly. We'll zoom into the monthly. You can see. So we had a big, and this is your monthly chart now. I've zoomed in a little bit. This is your November monthly candle. And so as we talk about, next month will be an inside month. And again, this is a ratio chart, so it's a little bit more complicated. It's not telling you about the absolute price. It just tells you you're a little bit in a no man's land, pulling back a little bit versus the overall sort of ETF. And, you know, SBSW is a similar kind of situation. I think they are also maybe involved in platinum as well. So they're diversified, but they're doing well, right? And that's after a period of underperformance, right? Like this long period. So it's also telling you, like, that is also maybe a statement on how uranium is going to do versus more, you know, a more diversified set of commodities. And so that's your monthly chart. Those are your quarterly, and now we're like actually on the monthly charts. Let's look at UUUU. Energy fuels. So we've just kind of been consolidating here. I mean, we had this pretty big move down, and then we just kind of came right back to where we were. And again, this is just your relative performance. So you can call this whole thing a bull flag that is at some point going to explode, let's say. I mean, we'll see, right? And I think the other one that stood out to me was Paladin, which I couldn't add here because it was, you know, because it's past the 8 limit. But like you can see, this is your monthly chart. But notice, these little monthly rallies have all been stamped out. Again, this is your ratio chart. So what this is telling you is there are periods where it's outperforming, and then we just roll over. I mean, this is like, if you looked up in it, if you looked, you know, you looked in a textbook, you could see downtrend, right? Like low, high, low, high. Well, this is that. You see, that's a slight lower low, lower high, slight lower low. So that's the one thing that you have going for it is that, as it's making lows, it's starting to make, like, the lows are getting, like, they're not substantially lower lows. Like, this was a much lower low than this. But these, it's kind of like cruising along the bottom. That doesn't necessarily tell you it's going to stop. Okay, so I guess, and so Paladin definitely has the risk of, you know, this kind of rolling over like all of these other rallies. I mean, it looks suspiciously similar, actually. And what does that look like on the quarterly? Right, that makes sense, right? So on the quarterly, it really just kind of looks like zigzag consolidation, right? Like, thought you were going up, then you thought you were going down, now you think you're going up, or you're just going to kind of continue to zigzag a little bit. So now, let's look at the names on an absolute basis. So we already looked at CCJ. Let's look at Nexgen because that one looks like it's one of the most bullish. NXE. So, and when you think about the weekly chart, right, you're riding this last low. So week 1, 2, 3, 4, 5. So the same kind of pattern. This made a lower low below this candle, and now it's going to try to make a higher high. And we're not going to be able to complete that this week. And so that gives you a target just above 476. And that would be potentially the gateway, because then right above there, you have this other pivot at around 485. That's your gateway to like 540, right? So like almost $1 of upside if we get like an overshoot from where we are here. So that's interesting. I mean, this whole little thing, you can see it as like a consolidation box that you're trying to like retest that. And that's obviously all-time highs there. And so it makes sense that this thing was, you know, massively outperforming its peers by staying green on the month and quarter, whereas almost everything else was red. And you can see I talked about the quarterly swing low. That's a monthly chart. This is your quarterly. Oh, okay, so Nexgen does not quite have the quarterly swing low yet. It would be above that 485 level that would happen. So above this candle here. So that's interesting. And also knowing that, you know, the year is obviously ending in a couple of months, like that will give us a chance to close above this. Like, imagine that. Even if we don't, again, you have that idea of the compound candle, the Q1 candle could kind of finish the deal. And of course, all of that is happening within the range of this big down candle from Q2, right, of this year. And so it's really about getting out of that range ultimately. So that's Nexgen. UROI was another one that looked interesting. So this is your quarterly chart. And so you can see the quarterly chart tells us we're really just inside this big range between, you know, call it, what was the high of that quarter? It was 332 and the low was 210. That's obviously huge. And we've even pulled back in here. So this tells me that, well, we have a whole quarter to close this. So something, you know, anything could happen. But it seems likely that our Q1 2023 candle is going to be inside this range, inside this box. It really just becomes a question of like, you know, is it sort of closer to the top of the box? Like, is it closer to here at the bottom of the box or closer to the top? And, you know, how does that position us for like a breakout above? And if we zoom down to the monthly, we can kind of see that's the consolidation box we're talking about. So you can almost see visually, you can almost see it kind of filling out here, just kind of churning, buying time almost. And down to the weekly level, yeah, we looked at this with a little bit more detail, right? So interestingly enough, this looks like your last major low, right? And so this is only the third week of a weekly cycle rally, and we had the high on week 2 already. So that's really interesting. So that tells you we're either going to have a really bearish result from this, or it's going to sort of snatch defeat from the jaws of victory, or whatever that saying goes. And we're going to find a way to make a high above here. That seems like the lower probability outcome, right? Like that's where you're kind of, again, that idea of like needing something to happen to be right. So that's like that, and that's why when you look at those higher time frames, like the yearly or quarterly, it's great to get the big picture view, but it's important to get down to the ground level and say, okay, well, this is an important swing high that we're kind of beneath right now that we're going to need to overcome, regardless of what that quarterly chart tells you. And to be fair, that chart did show us a big upper wick, right? So we knew there was a pullback on the lower time frame. It really just was a question of what was the actual market structure, and now we can see what that is. And more importantly, we can also see that this is another swing, like this is a lower high than this. It's always important to kind of note that, because when you think about what that means for the next, like the implication for the next move, it's like that and then that. Like what comes after a lower high? It's generally a lower low, right? And then another lower high and then another lower low. So that's why whenever you think you're spotting a lower high, really important, because what generally follows again is that lower low. So you want to kind of be especially on guard there. And so that is UROI. Yeah, I think the other ones we kind of walked through in the other video. So I think we'll just leave it there. That's the update on uranium. I'd say just in general, it's not, and I think we can maybe just kind of close this out by looking at URA versus SPX. See what that tells us. And so let's just go to the monthly chart. Yeah, so that's what's happening here, right? The URA versus SPX. And that's interesting, right? Because obviously, yeah, we've been in some kind of bear market since 2011, and especially versus the S&P. And I mean, look at this thing, how it's, you could, like, this is essentially a bull flag, right? But I mean, look at how many months we've been kind of chopping around versus this little upward movement back in 2020. So it's going to be interesting to see. At the same time, this is all happening beneath, or I should say above, the 50-month moving average, right? That's what the teal line is on the charts. It's always the 50-period moving average. So in this case, it's a monthly chart. So this could be due for like an explosion. And it does kind of like, you can see if we fall below that, then it's like, okay, well, uranium maybe is going into an even deeper winter, right? But it is important. I think this is a helpful view when you kind of zoom out. And let's see what that looks like on the quarterly, right? So on the quarterly, it's even easier to see where like we did have this pretty vertical move for 2 quarters. But then since then, it's just, I mean, look at this choppiness, man. This is an ugly, like, that's why I love zooming out, because this makes it even more just clear, like the choppiness, the choppy nature of it all. Like, yikes. But again, this little structure has been consolidating for a long time. So if it does break to the upside, that will be a violent move. And since this consolidation is off of this up move, even though it was relatively short, because I mean, you think about it, the up move lasted 2 quarters, and we've been consolidating for 1, 2, 3, 4, 5, 6, 7, right? That's right, like that's a lot of consolidation for just a 2-quarter rally, but which means the next move is probably going to be pretty explosive. Now the catch is it could be to the upside or downside, but again, since it's coming off of an impulse move, you would expect that it's just a continuation up. So this is going to be really interesting to watch over the years, and we'll certainly be covering it on this channel, but we will leave it at that for this uranium update here on November 23rd. So thank you again for joining.